All right, ready? Here we go. This is going to be an interesting one. Should you buy or should you wait? And given the current housing market situation we're in, that is the question, isn't it? So, and the answer I would say to that is both yes and no, but I will define that to where you can actually have some very strong takeaways from this. Because I think in the grand scheme of things, looking back, let's say 5 years at the housing market, given what the prices are today and interest rate is over 7, is it a good time to buy? Well, probably not, if you consider the big picture, the grand scheme of things. But if you were among the crazies who were house shopping earlier this year, really, early summer in particular, but I would say this entire year, if you were crazy enough to overbid and do that over and over again and still lose on the house, like I actually think those individuals are better off buying now than they were early summer. Yeah, it's a big statement to make, so let me show you some kind of interesting calculations to really support what I'm saying. Alrighty, so we're going to go to mortgagecalculator.org to run two very interesting side-by-side comparisons of realistic scenarios, I would say, for someone looking to buy a house back in June of this year at 3% interest rate, bid over asking, versus someone looking to buy a house today at, say, 7% interest rate, likely under asking. So really the variables that are going to change are the purchase price and the interest rate. Everything else remains the same, so that's why I zeroed out the hazard insurance. It doesn't matter. Property taxes don't matter for this purposes. So all that is zeroed out. I'm simply comparing. Is it better to buy a house over what it's worth for a lower interest rate, or is it better to buy under asking for a higher interest rate? So that is the question. And this is obviously a 30-year sort of scenario, which I don't need. So I'm just going to zoom in to say 5 years. Most people end up moving in 5 years or so anyway. So that's what we're going to be looking at. And obviously, if you want to run into 10 or 20 years, whatever's more applicable to you, and results may vary. I didn't even run those. But just for the general population, most people move, refinance in 5 years anyway, so that's what we're going to look at. So the interest payment that is made for that first year is $15,000. This is, again, using a $550,000 purchase price for a $500,000 home, because that's what you had to do in order to win the house, but you got it at 3% interest rate. So we're going to look at the first year. You're essentially paying $15,000 in interest rate. Yep, that's the first year. Second year is 14. Third year is 14, 13. Is that 5? Yeah, that is 5. And for the sake of simple math, I just really want to keep my math simple. So I'm going to take $15,000 on average is what we're paying in interest for on this 3% mortgage, purchase price of $550,000. And I'm going to multiply it by 5 years. So after 5 years, we would have paid, or you would have paid, $75,000 in interest. Now let's compare that with our next scenario. So the same $500,000 house, we're now buying likely under asking in the current environment. So $475,000, just $25,000 below asking. So we're still using that same 5% down payment, but now our interest rate is 7%. So, and everything else is zeroed out, so it's a fair comparison. When I hit calculate, this is our 30 year, but I don't need to see all 30 years. I'm just curious on the first 5. So I am paying $30,000 now in interest for the first year, 29, 29, 28, 28. So I'm going to use $30,000 as a figure for how much interest rate I'm going to pay in the first 5 years. And 30,000 times 5 equals 150,000. So in the first 5 years, on a 3% mortgage, you'll pay $75,000 on the in interest, but on a 7% interest rate, you'll pay $150,000 in mortgage in the first 5 years. Big difference? Yeah. But isn't that also the difference between the purchase price of then and now? Because think about it. We had to overbid to buy back in June or earlier this year. So a $500,000 house would be selling for $550,000 versus I could go under asking these days for about $25,000, generally is acceptable given the purchase price here. So I am basically at a wash is what I am trying to show you. So if you were crazy enough to buy then, you should be crazy enough to buy now, because at the end of the day, it's more or less a wash. Does that make sense? So we essentially have paid $75,000 in interest on a 3% mortgage in the first 5 years, but we overpaid on the house by $75,000 versus we bought a house, a $500,000 house for $475,000 at a 7% interest rate. We're paying $150,000 in interest rate on the first 5 years, but we underpaid for the house, $75,000 in comparison to what it would have been back in June. So again, if you're crazy enough to have been shopping and trying to get into a house, having 100 bids earlier this year on different houses that you lost, well maybe not 100 but 10, then you should just be as comfortable buying something today, because chances are very good you could either A, refinance in the next 5 years, or likely you're going to sell. And the reason you would want to refinance in the next 5 years is to lower the interest rate. If you do happen to love your house and the rates drop, fantastic. Now, if the rates don't drop, then you likely would be in the same picture anyway, because you overpaid. You bought the house at the top of the market if you bought it in June of this year. So if you're crazy enough to do it then you might as well do it now, is the moral of the story. Or hindsight's 20/20. So if you are glad that back in July or June, you did not end up buying a house, then sit on your hands, do nothing for, I would say, the next year until things normalize some. But I'm actually going to make the next video about how do you gauge, or how can you tell, how do you measure what is a good deal in the current environment? And I'm going to make it very simplistic too, using a very simple chart. So I think that'll go a long way for some of you, those of you who are still would rather buy or find a way to buy a house this year or even 2023. Likely it's going to be wavy waters. So I think having a little bit of input here is going to help. So really that's what I wanted to illustrate today, that at the end of the day, you're more or less in the same boat. A little interesting. I was a little puzzled when kind of running the two side-by-side comparisons, but it does make sense at the end of the day. Think about it. So that's all. I'm keeping this one short. Let me know what you think about that. I mean, it's kind of hard to argue the numbers, so I don't expect you to do that, but perhaps I'm missing something in the equation. So talk to me. Let me know what you think. And please subscribe if you haven't already. That helps a ton. And share with a friend. Thanks for watching as always. I love getting on here, and I hope to continue to doing this as much as I can, even though life gets in the way, but I do appreciate you coming back and letting me rattle for a little bit.